If you want to dive into something really hot, is the new price of Bitcoin.
Hello and welcome back to AIBC Summit YouTube channel. We'll now be discussing the recent evolution of the cryptocurrency sphere. And joining me is the co-founder at Blockchain UCLA, Alex Nascimento, and Alex Fazel, Chief Partnership Officer at SwissBorg. So guys, it's great for you both to join us on the line today. Thank you so much, first of all.
Thanks, Jessica, for having us.
Thanks so much for having us, Jessica. You're an awesome host. Definitely one of the top 3 in my opinion.
Thank you so much. Shout out to the other top 2 for you as well. So I want to start by referencing UCLA, Alex, when it comes to the recent news that we've seen with federally chartered US banks and thrifts, and they may now provide custody services for crypto assets. It has given the market a big boost. It's big news in the US. So maybe you can give some context for our European audience. Why is this such big news?
Yeah, so the biggest thing that we're seeing in the past, let's say 3 years or so, like from 2018 onwards, is a massive adoption of institutional financial players taking into digital assets as an asset class, right? And you have seen things like Fidelity, which is a major financial player here in the U.S. and one of the largest ones in the world, release their digital asset, or as you may call it, crypto assets solution, right? And it's something that people sometimes look and they're like, wow, Fidelity is in the space. Or actually, Fidelity has been working on their digital solution for institutional players since 2014. People were not even talking about Bitcoin in 2014. You have the New York Stock Exchange with the backed solution, which is also another custody play. So we've been seeing since 2018, when the whole hype of ICOs kind of dropped and people started looking at regulated forms of digital assets, security tokens, which is our specialty in research at UCLA, a much greater adoption from institutional players. And if you're an institutional player, you need to counterbalance counterparty risk. Right, and that's one of the things we're seeing now, the government supporting that solution, because now it's the custody solution, or the counterparty risk mitigation part of it is now being regulated, which is great for the industry. So if, I don't want to elongate too much, but if you think about it, now institutional players like Vanguard or pension funds can now hold digital assets without having to worry about who has the password. Is it the intern that has the password, or who is it?
But just to comment on what you're saying, Alex, in terms of Fidelity, I think they're the absolute best example when it comes to institutional adoption, just simply because, as you said, you go all the way back to 1992 with the Salomon brothers. They created the fixed protocol, right? And that was probably the biggest innovation when it comes to aggregating liquidity pools in the past 30 years. It's when you're going from a phone call as a broker to actually executing through, a Bloomberg terminal. So I think Fidelity, like when you talk about institutional adoption and getting into the space, Fidelity is the reference, without a doubt, right?
Sure, right. That's super interesting because I know the guys from Fidelity with the digital assets or digital solutions, and it's impressive that they've been looking at this since 2014. Like 2014, it would be interesting to see what was the price of Bitcoin then, but they were already looking at it.
Yeah.
And it goes small talk that one of the high executives at Fidelity used to mine Bitcoin underneath her table.
Yeah.
It's a well-known urban legend.
And you always have to trust the people that have been in this space that long as well. I think they always have the most interesting stories to tell. Alex, I'd love to jump in now and just ask you, because as we know, Switzerland is one of the most regulated crypto countries in the world. So what's your take on this news? And are you kind of looking at the US now and seeing where they might be in 2 to 3 years' time when it comes to crypto adoption?
Yeah, absolutely. Great question, Jessica. Switzerland is really the reference when it comes to regulation and frameworks and guidelines. the FINMA have done an incredible job. And, it's really in the DNA of Switzerland. I'm half Swiss, and, in Switzerland, as you know, it's a neutral country, which goes very well with the blockchain values. Also, the leadership is completely decentralized with a mechanism called cantons, which are mini states like in the US. So we already have distributed governance. We already have a fintech hub because Switzerland has very long expertise when it comes to financial services. But on top of that, we have the custody solutions. And on top of that, Switzerland has some of the finest engineers in the world. You have elite schools like, for example, Polytechnique Lausanne or Polytechnique Zurich. Einstein used to teach at Polytechnique Zurich. So that's just to show you, how many brains there are in Switzerland. So it just really, all these things are really important to understand because all those factors created what the FINMA is today. And a lot of people say that the FINMA guidelines and frameworks for classifying tokens and different crypto assets is the most advanced as of today and has inspired many other financial regulators to do better and understand the space a little bit more. So, Switzerland has done great things for our space, without a doubt.
Absolutely, I couldn't agree more. And now, Alex, from a US perspective, I'd love to turn to you now because from a regulatory standpoint, watching the US's evolution has been very interesting, and it's definitely caught the attention of worldwide people in the cryptocurrency and also emerging tech space. How are you viewing the industry at the moment?
It's a very interesting space, right? And I don't know if I'm biased, probably I am, but I think that we've seen the US charge the adoption of digital assets because the SEC, the regulating body here in the US, the Securities Exchange Commission, regulates about 40% of all the global trades of equities and bonds. And you can find me hitting on that point when I speak at different conferences. And it clearly explains why most of the players around the world look at the US, or in this case to the SEC, for guidance, right? Because if you're an international regulated player or an institutional player, you want to participate in 40% of the market. So you don't want to be outside that, right? So given that the US represents that large lion's share of trades, everyone looked at the SEC to see how is this going to get regulated. Although there are a lot of countries like Switzerland took charge and trailblazed and put out regulation way before the US. Many institutional players were waiting to see what the SEC would say. And it's important to note that on July of last year, only in 2019, the SEC approved a full public offering of a token or a TGE, a token generating event. And it was not one, but it was actually two tokens that were publicly sold. Props from our friend and contributor to our book, Assignment and Blockstack. So that opened the floodgates for a lot of other institutional players to look at that and say, oh, okay, now the SEC is comfortable with a regulatory framework that was already existing during the Obama administration, which is the Jobs Act.
And I'd like to run through some of the recent news that we have seen as well and just get both of your perspectives on what we've seen. And one of the big talking points that we have seen across news outlets and also social media platforms is Ethereum has been a very big talking point as of recent weeks. We have seen a huge price spike last week of around 10% in 13 minutes, 15% in a single day. I'd love to get your opinion, both of you, on why this might have been, if it was part of this DeFi surge that people are talking about, the Ethereum 2.0 public testnet, or people considering that Ethereum's potentially undervalued. If we look at compared to Bitcoin's recovered almost 50% of its value since the all-time high, Ethereum is still around 80% below that. So Alex, Fazel, I'd love to start with you and just get your perspectives on what we are seeing from this altcoin.
Yeah, that's a really good question. I mean, just like in terms of the technicals, we know that Ethereum is looking good on charts. But in terms of the fundamentals, I do not see such progress. And actually, I think it's a little bit overhyped. The whole reasoning behind the DeFi is amazing, right? At the moment on the Ethereum blockchain, you have $3.5 billion locked up which is significant gains, more than 3 to 5x in the past 6 months. So DeFi is growing without a doubt. But the problem is Ethereum is dating with these DeFi projects, but is not married to these DeFi projects. So a simple analogy to really understand this is a lot of people are creating the fundamental value of Ethereum through DeFi, but the best way to see it is really imagine Ethereum is a big shopping mall, right? What DeFi projects are just little stores, that are in that shopping mall, but are not owned by the shopping mall. So we got to understand that, with the fundamental issues such as the congested networks, the crazy the gas fees recently, like gas fees have become so expensive that it's difficult to use DeFi projects. I mean, the lending and borrowing, it costs $3.6 for a transaction just for simple smart contract transfer from your MU to a DEX, for instance, or from your MU to a lending platform. So fundamentally, I do not think Ethereum is looking really good, although I do believe in their progress in the future. And I think that people who emphasize the fact that DeFi is one of the reasons why Ethereum is actually pumping, that is not the case, because these DeFi projects, most of them declare themselves as blockchain agnostic. And what that means is basically if Ethereum is too expensive, if the gas fees are affecting all the decentralized applications, they can simply jump onto another platform if Ethereum doesn't scale. And Ethereum 2.0, there are some news, but not major progress. It has been delayed. So fundamentally, I still think Ethereum has a lot to prove. In terms of price action and technicals, of course, things are looking really good. And like you guys mentioned, you're talking about institutional activity. I think a lot of the people, once they understand Bitcoin, tend to by default go to Ethereum. So I think it's more of technicals and TA rather than the fundamentals.
Fantastic. Thank you so much. And Alex, I'd love to get your outlook from the blockchain US at UCLA perspective. What's your thoughts on Ethereum, DeFi, the trend at the moment that we are seeing?
If you track the history of blockchain as a technology and adoption, we've been going through these phases which, something becomes the hot topic for that month or for that quarter, or call it like 6 months. And now it's DeFi, right? And DeFi it's a very interesting financial play, one that I highly recommend people to extensively research before they enter it, because you might be what we call crypto rich on DeFi, and then when you try to liquidate that, then you might find challenges. So obviously the whole DeFi ecosystem is built for a large portion of it on top of Ethereum, so that creates that kind of FOMO or kind of pump, I would say, or people get excited about it. I agree with Alex Fazel, because Ethereum really, has more adoption than I had before. You have a lot of security tokens that are built on Ethereum, but you have competing protocols that are fighting that battle to be the protocol for institutional adoption. Example, Tezos is one that's getting a lot of traction in that space. Polymath is now releasing their Polymash protocol. So for the usability, I think that it's still overhyped. And you can look on websites like the State of dApps, and you can check out how many people are actually using dApps, and it's not that much. And another interesting scenario, when you talk about the US as a perspective, is that when Ethereum moves to a staking mechanism, it's going to be really hard for you to convince the SEC that that's not an investment contract, right? Because if I give you something and I hope to get something in return, how are you going to say that that's not an investment contract? And I fear that might be a big downside for Ethereum when that comes. So from the Ethereum Classic or Ethereum Foundation point of view, it's kind of like, do you fight the battle of becoming a security, or do you build a better protocol?
And you mentioned some really interesting points there. And I would love to ask this question to both of you. When it comes to, you've mentioned some of the trends there, Alex, when it comes to these 3 to 6 month seasonal trends, when it comes to the buzzwords. We saw 2017, there was the ICO craze that moved over to STOs. We're talking about DeFi now. But as both of you are very well connected, and Alex from UCLA, we'll start with you. What kind of things are you looking at in the emerging tech sphere at the moment that really are holding the most interest to you, and areas that you are keeping an eye on in the industry?
Yeah, so our research was always very focused on institutional adoption, both from a private company, which I manage an investment and advisory firm, as well as UCLA, right? UCLA is one of the largest universities in the US. And then when we saw that ICOs were deemed unregulated securities offering, we took a pivot to really understand and research around the world how security tokens or token generation events could be regulated. I recommend people to check out our book on Amazon. Is the STO Financial Revolution. It's $1 on Amazon, and all the proceeds go back to UCLA. So the idea is to educate people more than anything. So we continually see more institutional products becoming tokenized, right? And this is not new. People think about this, oh, this is a revolutionary technology. NASDAQ has been doing digital shares for decades. And now NASDAQ has a full-fledged solution for security tokens and digitized financial products. So that's a lot of what we looked at. But if you want to dive into something really hot, is the new price of Bitcoin. Today it was like 10,400.
And what would you say is most interesting about the price of Bitcoin? Would you say it's an undervalued asset at present, or what's so interesting about it to you?
You know, I find it hard to believe that we're going to see a V recovery. Obviously, the biggest investor in the space now are the central banks, which are just printing money, right, and buying bonds of every kind of company to try to support the economy. So it's a theory that you no longer have free markets, right? The markets are now all driven by central banks. So we're seeing a recovery because central banks continue to push that up. But if you look deeper under the hood, you're seeing people getting afraid of what's coming next, and that fear results in the rise of things like gold and silver, and Bitcoin as its entire theory was the digital gold. So I think that kind of move into things that may not bear interest, like gold, but are rising in price because people are uncertain, are also pushing the price of Bitcoin.
And Alex from SwissBorg, I'd love to turn to you now, because from a content perspective, you interview a lot of organizations and you're very heavily involved. But from a platform perspective, you've also had a very strong onboarding year, and also 2019 as well. So for you, what kind of aspects of the blockchain, cryptocurrency, and emerging tech sphere are of significant importance to you now? Where's of interest?
Okay, cool. Yeah. So I think just to piggyback on what Alex is saying, so Bitcoin is obviously the mother of the entire economy, right? It's basically the blockchain that gave birth. But to me, what is even more interesting in terms of future developments is tokenomics. I really, really, Jessica, would love to see the day where we can get away from this shared economy or VC equity type economy and go fully into an inclusive economy where everyone can be included, from funding a project to reaping the dividends to using the tokens. And really, there's one thing that we dream at SwissBorg is to do exactly that. We've never raised any rounds of equity or VC money, and it's always been inclusive from the beginning to the decentralized governance through referendums. And I think what we really need to do is for institutions, or just everybody in general, to really understand that crypto assets is not purely speculative. You can buy coins and tokens that have real inherent or intrinsic value. Not only they can be used on a daily basis, they can either save you time, save you money, help you earn money, But on top of that, you can have great tokenomics, such as, protecting and burning tokens, reducing the supply. It's a lot smarter than a share. With a share, if you buy a share at a tech company, you would be lucky if you could simply vote, because most shares that you do buy have very exclusive rights and you won't even be able to vote. All you do is speculate on the price for the future. You can't use it. You're just speculating. And really what people need to understand is that the future, Finance 2.0, is the token economy. It's not shares, it's not equity. And we need more companies to create this DAO. And by the way, the DAO is a concept that kind of disappeared, but it's the most important concept among the entire space. More important than Bitcoin, but Bitcoin created it, because that's really where everything will be open, fair, meaningful, and accessible to all.
Fantastic. Well, both of you, thank you so much for joining me on the line. You've provided significant insights from your respective countries and job roles as well. So I really appreciate your time today. Thank you both so much.
My pleasure.
Thanks for having us, Jessica.
You're so welcome. Well, we hope you enjoyed this segment. Share your thoughts and opinions in the comment box below.